8 lakh of profit. So this is my scenario 2. So second also I have completed. Now third one I have to do. In third one, there will also be a change in the fixed cost. Also there will be change in the labor cost. This I have to bring it in the format. So here is the statement format for the third option. So sales, I can refer the first table and take this value. At 80% I was making 48 lakh sales, and at 50% I am making overseas 27 lakh sales. So both of this I can consider it here in the sales column, 48 and 27. So my total sales will be 75. Next, variable cost. So direct material. So I know my 100% of direct material. So let's make working here 100% what is the value and 130% what is the value. So direct material will be 15 divided by 80%. So 18.75 is the 100%, and at 130% it is going to be 240 or 24.375 lakh. Similarly, my direct labor 6 lakh divided by 80%, at 100% it is going to be 7.5, but 130% it is going to change. The reason is the point B, which says the excess capacity labor will be paid 1.5 times the normal wage rate. That means between 100 to 130%. Whatever is the labor cost, I have to consider 1.5 times more than that. To get this, I will multiply 7.5 lakh by 30%. So that is 2.25 lakh into 1.5. So 3.375 lakh. This is the overtime premium for the labor. So this I add 7.5 plus 3.375. Variable overhead. So 3 lakh 80%, that means at 100% it is going to be 3.75. At 130% it is going to be 4.875. And fixed overhead, there is a condition in point A. Buying an equipment that will increase capacity by 10%, this will result in an increase of 1.5 lakh in fixed cost. So 19 plus 1.5 lakh, so 20.5 in the fixed overhead. So all this column I can directly take in the total column instead of splitting them between domestic and export. So my total cost, variable cost, is 40 lakh 0.125. So that means my contribution is 34.875. Now fixed cost also there is an increase. So I will take the new value 20.5 lakh. So that will give me a profit of 14.375 lakh. Now after this I have to make a comparative statement saying what is the option and what is the profit. So when I compare, option 3 is a 14.375 lakh, which is the highest. Then option 2 is 8 lakh and option 1 is 5 lakh. So I will go with option 3, which is I buy additional equipment, incur extra fixed cost, and for remaining capacity I work overtime and pay labors at 1.5 times. So in the marginal application, marginal costing decision making application, one topic which we covered was accept or reject an additional offer. So everything here, revolves around your capacity, your variable cost, those things. So second type is make or buy decision with limiting machine hours. So let's understand what exactly is this. So let's say I am manufacturing two products, A and B. I can manufacture. So right now I am manufacturing A for 100% capacity, and let's say I am earning 10 rupee as contribution per unit. So B I am not able to manufacture. Why? Already my 100% capacity is dedicated to A. So what I am doing, I will purchase this from outside. You are management consultant of PQR Limited. The managing director seeks your advice on the following situation. The company manufactures a range of electronic device that includes several component parts. Product X requires 4 hours on machine number 42, which is operating at full capacity. So question is saying clearly it is full capacity and it requires 4 hours. The selling price of X is 60 per unit and its marginal cost is 40 per unit. This is about product X. Component C15 can also be manufactured on the same machine, requiring 1.5 hours per unit at a marginal cost of 7 per unit. The external supplier offers C15 at 15.5 per unit. Should the company make or buy C15? Assume that the available machine hour are limiting factor. So in this case, I will first write all the detail with respect to product X on one side and C15 on the other side. So this question is asking what? Should I make C15 or buy C15? So with respect to product X, what is the data available? Sales 60 per unit. Then I have variable cost. So here they have given marginal cost, means variable cost 40 per unit. So therefore my contribution per unit is 20 per unit. Now this product X requires 5 machine hours. So this contribution, now I will further divide by hours and find out contribution per hour. So contribution per hour is equal to 20 divided by 5 is equal to 4 per hour. Okay. So that means whenever I'm manufacturing, for each 1 hour I spend that machine, I'm getting 4 rupee as a contribution. Now I will consider what is this another case. So the second is your component C15. So what is this variable cost? Variable cost, so it is given marginal cost of 7 per unit. So 7 per unit. Also, I will add the contribution lost. If I manufacture C15, I will not be able to manufacture product X. Correct? So in this case, so what is the contribution lost? So it is 4 per hour, but this component requires 1.5 hour. Okay. This is sorry, see, product X requires 4 hours. So not, this is not 5 hours, it is 4 hour. So contribution per hour will be 5. So product X requires 4 hours, not 5 hours. And C15 requires 1.5 hour. So contribution lost is 1.5 hour into 5. So this is equal to 7.5. So total cost to make. So I'm not preparing a statement in the case of C15. What I'm doing, I'm finding out the total cost. So first element is the variable cost. Second element is the opportunity cost, which is contribution lost. So total cost for decision making is 7.5 plus 7. It is 14.5 per unit. Now I will compare this with the purchase price, purchase cost. So my purchase cost is given 15.5 per unit. So which is cheaper? This is cheaper. So this is cheaper. That means I will, instead of purchasing it from outside, I will make it. Even though there is a contribution lost in product X, that is also no problem. Why? Here I am getting a benefit of 1 rupee per unit. So this is advisable. So last remarks, you have to write it as, it is beneficial to make C15 in-house. Limiting factors in the production. One is raw material availability. So let's say you are manufacturing battery. lithium ion battery. So in this case, lithium is not very easily available. It is called as rare earth mineral. I have a factory, big factory, lot of machines are there, but I do not have skilled man who can run those machines. So this is the second type. Third, machine hour means I have a small factory. I have lot of skilled manpower. I have raw material. Even though I run my factory for 24 hours, my machines are limited. So in this case, machine hour becomes a limitation factor. So all these are what? Internal. So okay, raw material availability is also external, but machine hour and man hour is internal. So this is rupees. This is units. Then third one, raw material is in short supply. This is internal. So for this first, what you have to do, so there are two products. You have to prepare the statement of marginal cost. Sales minus all variable cost, you will get contribution. So first let us prepare this statement. So this is how the contribution per unit will look for A and B. 75 minus 55, 20. Then 80 minus 62 is 18. What is this? This is contribution per unit. So first case we will take. Total sales potential in unit is key factor. A is profitable. Correct. So here I will write for 1, A is preferred because I have a limitation on units. So if my units are limited, I will go with one which has more contribution per unit. In this case, it is A. Second, sales potential in value is the key factor. So here I cannot calculate the value. Why? I do not know the multiplier units for A and B. So alternatively, what I have PV ratio. So I calculate PV ratio. So PV ratio is given by contribution over sales. So in case of A, it will be 20 divided by 75. So in this case also, my first ranking goes to A only. So for the second case, higher PVR is the deciding factor. Is A, therefore A is preferred. So here I have contribution per unit, which is at level of A and B, but they use raw material in different kgs. For example, in this question, the consumption of material for A is 2 kg, B is also 2 kg. So what I will calculate, contribution per key factor. Third one, I will calculate contribution per key factor. So that is my contribution per key factor. B is 18. This also uses 2 per kg. So this will be 9 per kg. If the same example, instead of 2 kg, it had 1.5 kg. So 18 divided by 1.5 would have become 12 per kg. Correct? In that case, this would have been my rank 1. So I would have preferred to manufacture B. But here, since 10 is higher, whichever is higher, I have to take. So case 3 also, product A is preferred. Then last one, fourth one. Fourth one, what is the limiting factor? Machine hour is the limiting factor. So machine hour for A is 3, for B it is 2. In fourth also, I calculate contribution per key factor. Here key factor is machine hours. So 20 divided by 3. So I will get 6.67 per kg. And here 18 divided by 2. So this is not kg, this is per hour. Okay, since the key factor is hour here, 6.67 per machine hour. Here 18 divided by 2 for B will be 9 per machine hour. So in this case, clearly 9 is higher. So this is first rank. So I will prefer to manufacture B if the production capacity in terms of machine hour is the key factor.
Dear students, I have more videos on detailed marginal costing coming up. Also, there is a dedicated playlist for management accounting. Please go through it and make use of it.